Hey everyone, welcome back to Corporate Decoder, the place where we crack open corporate filings to reveal the real stories hidden inside. And today we're diving into First Financial Bankshares' latest 8K filing, and let's just say they're extending their playtime with shareholder money. So First Financial Bankshares, a Texas-based company in the financial sector, has announced a significant update to its stock repurchase plan. This isn't just a minor adjustment, they're giving themselves a whole extra year to buy back their own company stock. What does this mean in plain English? Well, a stock repurchase plan, sometimes called a buyback, is when a company uses its own cash to buy its shares from the open market. It's like a company investing in itself, and it can signal a few things. They've extended the deadline for this plan from this coming July 31st to July 31st of next year, 2026. And get this, they're still authorized to buy back up to a massive 5 million shares of their own common stock. This is a substantial chunk of their stock, and extending the buyback period suggests they believe their stock is undervalued, or they simply have a lot of excess cash they want to return to shareholders. Companies do this to potentially increase the value of the remaining shares by reducing the number of shares available. Think of it like a pie. If you cut it into fewer slices, each slice becomes bigger, and in this case, each remaining share could theoretically be worth more. How will they go about this? The filing states they can buy shares on the open market through private deals or any other legal way. This gives them a lot of flexibility. They're not locked into one specific strategy, which is good for adaptability, but also means the timing and price of these buybacks can vary. The decision on when and how much to repurchase within that 5 million share limit will be driven by several factors. They'll be watching the stock's price, how much is being traded, and very importantly, they need approval, or at least no objections from regulatory bodies like the Federal Reserve, especially given they are a financial institution. Market conditions will also play a big role. This means they aren't just going to blindly buy shares. They'll be strategic about it. And importantly, they can stop or pause this plan whenever they see fit without warning. This is pretty standard for buyback programs, but it's good to remember that their commitment isn't set in stone. It gives them an out if circumstances change, like if market conditions turn sour or they need that cash for other opportunities or unexpected events. For context, First Financial Bankshares common stock is traded on the Nasdaq Global Select Market under the ticker symbol FVN. This is a pretty reputable exchange, so their stock is accessible to a wide range of investors. This particular filing is under the Other Events section of an 8K. That usually means it's reporting a significant event investors need to know about promptly, and a major buyback extension certainly qualifies. They've also attached a press release as an exhibit to this filing. And interestingly, the press release announcing this board action is dated July 23rd, after the event itself. This is standard practice to give the market formal notification. The report is signed by F. Scott Duser, who serves as both the chairman and chief executive officer. This tells us that the highest levels of leadership are approving and overseeing the significant financial decision. Now let's step back and look at what this all means. Extending a stock buyback plan for a full year while keeping a large authorization in place signals a strong belief by First Financial Bankshares management in their company's future prospects and its current valuation. It's a way to reward shareholders and potentially boost the stock price by reducing the supply. However, it also means they are comfortable allocating a significant amount of capital towards share repurchases rather than, say, aggressive expansion, debt reduction, or advantageous rather than, say, aggressive expansion, debt reduction, or dividends. For investors, this is generally seen as a positive signal, but it's always wise to consider the company's overall financial health and strategic priorities. Are they buying back shares because they're truly undervalued or because they lack more compelling investment opportunities elsewhere? Without seeing the full financial picture from their quarterly or annual reports, it's hard to say definitively, but an extended buyback like this definitely puts them on our radar for continued observation. What's your take on this extended buyback program from First Financial Bankshares? Do you see it as a smart move to boost shareholder value, or are you looking for other signs of growth? Let us know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our Discord community, linked down in the description, for even more in-depth discussions. Thanks for watching, and we'll see you in the next video.